Alright people, this is the video for GBPUSD. As I promised, I'll throw in something a little more which is crude oil, but this is the video on GBPUSD on my trade review of the last trading that we just had, and how I trade price and what I see in price and what I look to understand from price before I get into my trades for Saturday afternoon. Alright, let's just get to it. First thing, in as much as on my Instagram, people would see me get entries on a 5 minute time frame, 30 minute time frame, 15 minutes on whatever. Sometimes they take the piss and go to the 1 minute time frame. But in as much as I get all these entries to get a good R in the trade, say 8R, 10R, 20R, this is not magical. Like by the time I'm done doing it, you see it's actually possible. One thing I want to say is don't listen to anyone in this business. Like even me, I don't even think you can take my advice, but don't take me word for word. Because most people are like, oh yeah, it's not possible to make this amount of hours. You're over leveraging. Nah, I don't ever go above 1%. I might go like 1.2% based on like say I had a slippage when I got into a trade or spreads. I might take like a 1.2% trade, but I don't ever go above 1%. And my strike rate is decent, like it's proper decent, and I will sit bang good hours. I trade mostly GBPUSD. I have been studying crude oil for some time. That's going to be another pair I'd have on my list. I'll mostly just swing it, like swing it for about 400, 500, 300 pips. Crude oil moves a lot, it moves quite a lot. Like a dollar movement in crude oil is 100 pips. So, and it does that easy intraday. In 4 days, we're talking 2 days, we're talking about 400 pip moves. So I'm looking to pattern that out. I'll get that sorted soon. I've just been studying it and demoing it for now. Now I'm back to talking about R's. You can get a decent amount of R's. I'm not even saying I'm not. You can get 20 R's and whatever. Um, but it's don't settle for two. Don't settle to what the so-called gurus are always saying. Over there, like, oh yeah, get 2 R's. That is better. Is more. Nah, fuck that. Honestly, fuck that. Yeah, so let me just get to it. So in as much as you guys see me get my entries in the lower time frames, my analysis always come from the monthly, the weekly, the daily. I always start from high time frame, because once you deal with the high time frame flows, that is how you get the big moves. Say 100 pip. That's how you'll be able to get 100 pip move, 200 pip move, and be able to stay in it, having high time frame targets. Even if I'm getting my entries off of the 5 minute time frame, my targets are high time frame targets, because I'm using the high time frame order flow. That is the only way you'll be able to get big moves and enjoy your trades, get big pips, get big R's, however you judge your trades. Right. So looking at GBPUSD this week, I let me start from the weekly. Something I want to say is price is always in a range. You just have to determine what range is price actually in. Once you can figure out what range price is in, then you have most of your work cut out for you. That is something that people don't always know. Price is always in a range. Range is basically when you have a range high and a range low. The range high, let me try and break it down. You can say is like the ceiling of a price, like a resistance level, and then the range low is like a support level. More times, what price does in the range is it will go down to a support level, basically the range low, to take out stops, right? To take out that certain level. But that is, if you're talking about retail pattern, that's a false break, swing failure pattern. To take it to make a false break and then reverse and then go back the other way. So more times when I see price take out a certain side of the range, all I just do is anticipate the other side of the range get taken. So what does that mean? I'll basically just start trading towards a certain direction, and I like sticking to one direction. I don't do that, oh, sell today, buy tomorrow, sell next tomorrow, buy next tomorrow. When I start my week, I like having a certain mindset, though sometimes it fucks me up, right? In as much as I have a certain mindset, I am flexible. Like if say I go into the week, right, and I was bullish on price, and something happens and I say that price is being bearish, I will switch my bias and become bearish on price. Learn how to stick to your analysis, but do not be stubborn. Like if you're stubborn, you're gonna get raped. Believe me, you will get raped in this game. So yeah, I do switch my bias, but I'm not like trading the fight, the tick chart and saying I'll buy here, sell here, next 10 minutes I'm buying here and selling here. You need to have the high time frame flow. Once you have the high time frame flow, it makes your work easy for you unless you focus on one side. So if we're looking at GBP USD, zoom in a bit. if we're looking at GBPUSD, here was the range low. Now, how do you determine ranges? Ranges is basically when you see price trading a certain area. It doesn't go above that area, it doesn't go below that area. It to take you time to notice, but when you start noticing it, it's easy to look at price and all right, this is a range low, this is a range high. The low of this is 1.37641. So this is the range low in price, and if we want to get to the range high, you even have to check. I think I can remember the level of must have been 504. Yeah, 504. That's what happens when you deal with one pair. I literally know most of the levels on cable without even looking at it. If you don't know what cable is the GBPUSD. So this is the range low, this is the range high in price. Let's look at this. So now we have the weekly side sorted out, right? I'll come back to this price chart, but let's just leave this at this for now. Let's go down to the daily and see. Now, if you are in a bullish trend, what you want to see is price respecting bullish order blocks and price breaking through bearish order blocks. If you are in a bearish trend, what you want to see is price breaking through bullish order blocks and respecting bearish order blocks. That is what lets you know, all right, cool, I am in this trend. Basically, what I'm saying is if you are in a bullish trend, you do want to see price respecting um, support levels and you want to see price breaking through resistance levels, and vice versa if you are in a bearish trend. So now that we know that our range low has been taken, right? What I always look for confirmation. It makes my trading sort of slow, right? But I like it because it gives me that consistency I always want. Like you guys would see, I don't always have trades on every single day of the week because that's not the kind of trader I am. Most times I'm just trading one pair, so yeah, it is kind of boring, but I like the consistency I get from it. So I trade one pair. So when all this move happened, I must have been trading the 4 hour chart when this happened, but I want to get back to what happened this week. Now, if you're looking at this, what gave me a confirmation that we were in a bullish trend? After we had taken out the swing, this range low, right? Next thing I was looking at was where is the next area of liquidity? You always have to ask yourself that question: where is money? Kind of how my friend would say, where's the money? If you know where the money is, if you know where the high time frame money is, which is more time, the weekly and daily chart, then most of your issues are solved. Now, if you look at this clean tops, right? These clean tops would get taken. 9 out of 10 times they will get taken. Fuck what the textbook says on baby persuade. They say, oh yeah, if you see, it does work. That's why I do not diss any trader. I'm not saying retail doesn't work. It actually does work, right? If you know how to use it properly. Because put it this way, if there was a retail trader that when price came back here, he noticed a double top and sold it, I cannot say it didn't work for him because guess what? He must have made about 400 pips. So I wouldn't say it doesn't work, but price, the market makers know that people have their stop losses here and people have buy stops here. Now, what the market looks to do is it pairs up orders. It will pair up buy stops and it will take out stop losses. So what does it do? It's pairing up orders and it will pair up people that were lucky enough to have their sell stops there. Sorry, have their sell limits there. So basically, the market will take out people that were right about the trade, take out interest, right? Take out what is it called? Unrealized profits, right? And then it will put people into the market. Now, what is that called? That's engineering liquidity. When it puts people into the market, 9 out of 10 times to fuck them up and reverse the trade. Now, think of this. What do we have here? Level of buy stops, right? So if we have a level of buy stops here, look what the market did. Came here, rallied through that level, dipped into where? A daily order block, right? And then dropped. These people, let's say they had their buy stop somewhere here. They hit a drawdown of what, 70 pips? Except maybe they took profits here. But more times people are thinking of this gets taken here, will get taken here, will get taken. That's why I do not really feel comfortable holding trades long term. I have swung a couple of times, not so often anyways. But I'm more of a short term trader, day trader, right? Most time my target gets hit in a day, and people mistake that for intraday. I do not look to get in and get out in a day. I do not care about time limits, right? I look to capitalize on the weekly range of price. Price always will make a range. The expansion, the manipulation, the distribution. I always look to capitalize on the distribution of price. But the way I trade now, more times when I get into a trade, my target gets hit in a day. I get into a trade and in a day I'm done making 15 hour, 10 hour. Average I look for 8 hour a week. If you're making 8 to 10 hour a week, right, which is basically 10%. If you start an account off of a grand, right, and you're making 10% every week, in a month you're making 40%, right? In a year and a half, you'll probably be up about 1.3 million if you can consistently do that. So I do not look for really marked targets. Obviously, that's some targets that I get that I don't even want to talk about it because it sounds unreal. So more times, that's why most times when I post my trades up, I wouldn't say, oh yeah, I'm up this hour. I will just lift it up as a trader. Because if I see the amount of hours I'm up by, I'll probably have people come to my comment section and chat bare rubbish to me, and I'm not even ready for that. So, anyways, if we're looking at this, what was your confirmation that we are in a bullish trend? Now, where was my targets? Here is one of them, and then obviously this level of buy stops. I was very wary. This was where I wanted to close everything, right? Now, if you look at this, here was a break in market structure. More times, when price takes out, a swing high, price will dip back into a level of into an area of interest to go back up. Reverse where we were looking for price to go lower. Price will break a swing low and then rally back up into an area of interest and then shit the bed. So if we're looking at it, when price broke this, I didn't care about all this dengue dengue thing that was going on here. What I was focusing on was this big black candle. Now this big black candle, we draw out the line here. So right now we have our daily order block. We've had our break in market structure. Don't worry, I'm yet to get to this week's trade, but I'm trying to tell you how I take my trades. I don't just start on Monday and okay, I'll buy here and sell here. Now I have to get a story from price letting me know that it is worth risking my capital. If not, I'm not going to take the trade. So we've had a break in market structure here. Now, what I was anticipating was price to come back to this level where I would do my buying and then seek liquidity here and here. I'm expecting here and here to get taken, but I'm going to wait for price to give me a clear signal that that is going to happen. I'm not in a hurry because I'll show you where we have rejected off of, and I don't like that level. Price might as well just shit the bed. So, anyways, we've had a break in market structure here. Price is returning back to a daily order block. Now we're done with the daily for now on this, right? So if we go down to the 4 hour charts, I like zooming out on price so I can see properly. If we go down now to the 4 hour charts, as you can see, it's the same thing. Price is fractal. Whatever you see on the daily, you can see it on the 4 hour, you can see it on the 1 hour, 30 minutes down to the 5 minutes. That's why I have the confidence in the 5 minutes because most people say, oh yeah, I don't trust the 5 minute levels. And I ask a question, if you have the right levels, why shouldn't price respect it? Most people just wake up or maybe get on the laptop or get in front of their PCs or whatever. Fucking hell, some people use iPads and phones, dickheads. Anyways, most people get on their stuff and they try to trade the 5 minute chart and do not even ask yourself what is the higher time frame. If you do not know what the higher time frame is saying, you already done. You already done. You might as well be trading 2 pips. And I'm not saying no one trades 2 pips. You can do that if that works for you. But I look to get like 100 pip moves, a 60 or 200 pip moves. These are the kind of moves I'm interested in. So I always have to break my analysis up to the higher time frame flow, from the higher time frame flow down to the 5 minutes. So now we've had our break in market structure. If I zoom in a bit, we've had a break in market structure here. This is another little break in market structure. Now here is the 4 hour block. Cable likes respecting the bodies of a candle. You can go back and test it and see if it works. But cable respects the body of a candle more times than it does to the wick. Price more times will dip into the body of a candle on cable. This is just I'm talking about my pair. I don't know about other pairs, so I'm not saying this is everywhere in price. So more times price will dip into the body of a candle, right, and then rip from there. So when I looked at this, I marked out the body of this 4 hour candle and I went down to the hourly candle. So if we go down to the hourly candle, or sorry, the hourly charts. So draw this out. So now we have broken down from the weekly to the daily, to the 4 hour. Now we're on the hourly. As soon as price hit this level, I wasn't expecting price to go any lower. There's something I call invalidation levels. Invalidation levels is basically a place whereby you say, I do not want to see price go below this level. Everyone should have that level. If you do not have that level, then you won't be able to know when to switch your buys. So you have a level whereby you tell us, all right, cool. If price goes below this level, then I might be wrong about my whole trade. That's something that traders do not like doing. We do not want to accept that we could actually be wrong. Yes, you can be wrong. So you have to learn how to say, all right, cool. If price goes below a certain level, then I might as well just be wrong about this whole trade. So when I did this, my invalidation level was here. I didn't want to see this low get taken, right? So I had this marked out as my invalidation level. So when I had this level marked out, price dipped into this level. Quickly, what I did was go into the 5 minute chart and see what I could do. If you go on my Instagram and one of my posts, you see me calling this trade. This was basically how I got the trade, why I said this was a higher time frame level. Price did a 20 pips run below this low, dipped into this other block. Quickly, what I did was I went to the 5 minutes. If you go to the 5 minute chart, I used the breaker. All right, cool. There it is. All right, cool. Here's the 5 minute chart. Price has dipped into the hourly level, right? So now we're expecting price to go higher. So here is a 5 minute breaker. This was the last candle that sent price down. Here's a big black candle sent price down, dips into an order block. Whenever I looked at a breaker, I always wanted to dip into an order block or take out stops. So price dips into an order block. As soon as it breaks above it, the retest of this level, this was where I got in on the trade. The retest on this level of this breaker, this is where I got into a trade and I was targeting this level and I got out. I got out on this day. But remember, I posted on my Instagram story saying next week, right? I'm getting ready to mash up cable. So if you looked at this, what was I expecting for next week? I wasn't expecting price again by invalidation levels. I didn't want to see price touch this low, right? So I was waiting for price to bottom out on Monday and then price to go higher. And yes, I do trade Mondays. I was waiting for price to bottom out on Monday and then do go higher. If I take this out, so we go on the 15 minute chart. Now this is the only trade I took. Now this is one of the trades I took on cable. I took a trade on Monday, I took a trade on Wednesday. So if we go down to the 15 minute chart, since I didn't expect price to take out this level, the next thing I was looking at, I marked out a 15 minute order block. We drew out this 15 minute order block here. Now here is Asian session. Price has a little bit of consolidation during the Asian session, then dips down as soon as London Open starts. Dips down into an order block. Now, most people consider this noise. See this up, down, up, down, up, down is noise, but that is where my lower time frame side comes in. So we have dipped into an order block and start breaking higher. What I was looking for was bullish price action. That's just all what I needed to see, bullish PA. So I was waiting for something that would let me know, all right, price wants to go higher. So when we had a rally up or drop back down, I wasn't so convinced until this happened. See this big rally up, right? This was a break in market structure. This was a break in market structure. Price went higher, right? And what is this? So breaking market structure, it did back down to an order block. All what you're going to hear me say is just the same thing over and over again. Price is fractal. So if you're seeing it on a daily, you might as well just do it on the 5 minutes. Just know when to use it. If you want to use a 5 minute chart, do not use it till it hits a higher time frame level. I learned it from someone. I'm not gonna act as if, oh yeah, I was cleaning out my charts and then God spoke to me. I learned it from someone. And if you do not, if you want to use a 5 minute chart, wait for price to hit higher time frame level. Wait for the breakdown of price, and then you get into your trade. Obviously, price I hit the look at my breakdown. Price I hit the daily level, right? So I had price come off the daily level. I had another confirmation of price coming off the 4 hour level, another confirmation of the hourly level, and then finally this lavender block, which is basically a 15 minute level. This is what I'm saying. Most people do not have the patience to wait for these confirmations. These confirmations will come to you if you just wait. Trading is more about the waiting. I do miss moves all because I'm waiting for my confirmation, and then I look at I'm like, oh fuck, I should have got into this trade. But it is what it is. I'd rather miss moves, right, than get egg and jump into a trade and I get slapped. So here was the 5 minute breaking market structure. As soon as we got the breaking market structure, I had this block highlighted. This was the block I wanted to deal with. Now and again, coming back to a body of blocks for cable. So when we had a break in market structure here, had the body of this block marked out. So if I draw this out, so here's the body of this block. I'm not even gonna lie, I was looking for about 10 pips above Friday high. The funny thing is, in as much as I have so like I was talking to a friend, right? I'm chatting to Aaron, and he says to me, "Why do you not hold your trades for your targets? Because obviously, if I hold my trades for some of my targets, I'll be getting about 100R, 50R, but I don't feel it's a personal thing." And this is what I was telling to so I was talking to someone that is trying to learn how to trade and he's struggling, and I was just basically trying to help him out on Instagram. He says something, and he was just getting excited about learning technicals. And I told him technicals are easy. If you talk to anyone that knows how to trade, they will actually confirm that. Understanding price doesn't really take too much, but understanding yourself. Trading is a constant battle with yourself. You're constantly fighting with your shadow. You're constantly fighting with the man in the mirror. That is what trading is all about. I don't have the patience to just hold trades. I'm not even gonna lie. Holding trades for like 2, 4 days, a week, it makes my fucking balls itch. I cannot do it. Honestly, I cannot hold trades for too long. So I had to come up with something that made me get the kind of made me get whatever someone that was holding trades would get, the kind of rewards where someone was holding trades would get, but I'll get in a short period of time. So when I looked at this, coming back to this, we had a break in market structure. We've had all our confirmations. Now here is the order block I want to deal with. I had my stops resting right below this order block. So if I calibrated my fit right, I was going for about I think 10, 20 pips above Friday's high. So if you draw from the body of this to the low, right, this is my entry. This is where my stop loss was. So I had about a 5.2. I think I just made it 5 pip stop loss. Had a 5 pip stop loss, and I have a rule: when price gets to 3R, I break even my trade. Because most I've realized if price gets to 3R and doesn't go higher, if it comes back down to my entry point, 9 out of 10 times I'm wrong about the trade. So when price got to 3R, right, I broke even this trade and I let it run higher. But that's the thing, I wasn't done with this trade. So I kept on looking at price going higher. And at this point, I had another compounding. I took another position on the trade. If you look at this point in price, at every down candle he made and rallied higher and marked out that down candle, expecting a drop back into that candle. That is the thing. Most people don't feel comfortable buying dips, but I'm a retracement trader. I do not buy except price is dipping. I do not buy rallies. I do not sell. I do not sell. I do not sell dips. I buy when price is dipping and I sell when price is rallying. So at every down candle, when price was going high, I would mark it out. So I marked out this candle, price never came down to the level. Marked out this candle, price never came down to the level. And mind you, I do not compound a position, except my previous position is either a break even or a little bit in profits. Most times I like it when it's in 1R. That way I know that if I get stopped out of this other position, I have something else to cushion me. Trading is all about money management and risk management. You have to learn to know how to keep your account alive. It's all about survival. Like when I hear people talk about flipping accounts, I'm not here to flip accounts. I actually want to do this for the next 4 years of my life. So I'm trying to survive. So you have to come up with a risk management. I have my risk management down, I have my money management down. I have a spreadsheet that literally tells me when I get into a trade where I should put my stop loss, what lot size I should put on the trade, how much I'm risking on the trade. I have a spreadsheet that does all of that for me. If you want to take this seriously, you might as well just do it properly. You say you want to do this for the rest of your life, you might as well just do it properly and not just do it at all. So I was marking out every down candles. When I finally had this down candle, I mapped it out. When a candle is more wicky than it has body, I will deal with the wick of the candle. If the candle has more body than it has wick, I will deal with the body of the candle. But if the candle has more wick than it has body, 9 out of 10 times, I'll deal with the wick of the candle. And sometimes it depends on when I count the amount of pips. If I count like from the high of low of a candle, the pip range isn't so crazy. I will use it because it's not affecting my trade so badly. So when price dipped back into this, I had another buy position here. So if you're looking at these two positions, right? Now let's go back to the hourly charts. When I did this, at this point, I had closed my trade, which was somewhere around here for Friday. Remember I said I was looking for Friday's high. This is Friday's high. This is 10 pips above Friday's high, which is what I was looking for my first position. So if we measure out 10 pips above Friday's high, that's about it. All right, so let me take this up before it confuses me. So that's 10 pips above Friday's high. Then my other target when I took my second position was here. So we go back down to the 5 minute charts. So here it is. My first position, right? Close it for about 12R. I know I didn't hold it up to the 10 pips. I just rounded it up for 12R. Second position had an 18R. So that was a total of what? 30R. So by Monday I was done 30R. And this is what I'm saying. You don't hear me say, oh yeah, this is where you should have bought from. I called out this trade. I told a friend about it. I said I would trade it on Monday, and I said expect an expansion, and it all happened. So there was a 12 hour, here was an 18 hour. So I was done with 30 hour on a Monday. So I just had to wait. First, this is what I was expecting on higher time frame. So if I was to take this off, let me go. Let me just create a new chart. So on the daily chart, this was the expansion. This is Monday's candle, is it? Yeah, this is Monday's candle. What I was expecting now is just the same thing. As price dipped into this daily block, as price dipped into this daily block, broke a market structure high. So broke market structure, dip back into a daily block, rallied high. What I was expecting was I wanted to see price dip back into this level to go higher, but I never got that. So I was expecting Wednesday's candle to dip into this level and then expand higher. But guess what? That never happened because we had broken market structure here. It's frustrating. Yeah, we broke market structure here. And price never did back into the daily order block. But this is one thing that higher time frame always helps. Now, if you go back to the weekly charts, once price breaks a certain level, let me draw this out. Always just all about support and resistance level and knowing when to make use of the higher time frame. So this was the body of the weekly order block. So if we look at this, make this another color. Here's the body of the weekly order block. The reason why I'm doing this, we'll come back to this. So take out my targets. All right. So this level here, when price never got back to this level, I was wondering why. Because I won't even lie, I was trying to sell on a Wednesday. It's a dick move trying to trade retracements, but yeah, I did try a dick move, and I won't lie, I lost 1 hour because I was blindsided. But I'll show you how you can recover from it, even if you take a loss. Taking a loss is all part of the game. Once you realize that taking a loss is part of the game, you will stop worrying so much about, oh yeah, my losses. So this was the level I had drawn out, right? And what I was expecting was here was a breakout. This candle sent price down, ran stops of this level, dipped into an order block, broke higher. I wanted to see price come back down to this level. So on Monday, what happened? On Tuesday, what happened was after Tuesday, it didn't dip into that level. I was expecting this low to get taken into this. Then I would be a buyer from here, targeting the range high. This is basically the range high, which is 1.4150 level. But that didn't happen. So I tried selling, right? I can't remember why I tried selling from. Let me see. I think I took a sell somewhere around here. Yeah, it was at this breaker. And I literally got fucked. And when that's when you take a loss, do not revenge trade, step back and ask yourself, is this something that I'm missing? Now, when we go back to this weekly charts, see the body of this weekly order block. If you go down to the daily, that's where price is reacting off of. Price rallied higher, came back, dipped into the body of the weekly order block to a pip, and it went higher again. You have to learn how to incorporate your levels. If you don't know how to incorporate your levels, then you'll always be blindsided, and that's not something you want to happen to you in this game. Now, mind you, when I said, "Oh yeah, you always have to stick to your bias," yes, I do make mistakes. We all make mistakes, And that's why I'll talk about my losses because I don't care. Everyone takes losses daily. That's if you're a day trader or weekly or something. We all take losses, but it's how your wins are. Mind you, I had net 30R on a Monday, and on a Tuesday, rather on a Wednesday, I took a loss. So that's what 29R for the week still. So when this happened, price did not respect this level and then rallied higher. I literally asked him, all right, what happened? So when I realized price was reacting off of this level, let me just use this chart. Price is reacting off of this level. I asked myself, okay, what am I missing? What am I not seeing properly from the charts? If you go down to the 5 minutes, I slightly like the 5 minutes a lot. It's just something that I am used to. If you go down to the 5 minutes, now this is the level, this is the weekly order block, right? So this is the higher time frame. I don't even want to see this low get taken. If this low gets taken, I might as well switch my buyers long term again. So when that low got taken, what I was missing was, sorry, when that low got rested, what I was missing was this fair value gap. Since I was in the 5 minutes, I didn't notice a gap. Price most times will cover a gap. A gap is like a glitch in price. It will want to cover that gap and get the orders that were filled in because when this gap happens, orders are not being filled in the market. So price will cover in this gap and fill in the orders. So that's what price was seeking. I think we must have been retail sales this morning or something like that. So we covered that, and I was asking myself, all right, cool. How can I get back into this trade now when I have gone back to my bias, which is what I would have stopped to in the first place, but I was being a dickhead trying to trace a retracement. So what I noticed was here is a breaker. If you notice this, zoom in. This is the last up candle, and this is just straight down candles and nothing more. I like seeing this. I don't like when I'm trying to use a break and then I see an up candle somewhere. I kind of get confused of which one to use. But I like seeing an up candle and series of down candles. Then all of a sudden, an expansion, leaving a void. So when we get this expansion, leaving a void, what you should notice is, okay, the price takeout stops. The price is dipping to an order block, and yes, price takeout stops. Something again about double bottom. This is like a lower time from double bottom. If you go like on the 1 minute, you see what I'm saying. This is a 1 minute double bottom chart. Bottom, almost a clean bottom, and then it starts running higher. So when you look at the 5 minutes, price ran stops on this level and then rallied higher. So what I wanted to do was I wanted to buy back from here. So as soon as price came back to this level, I had my buy limit set here. And I'm not even gonna lie, since we had FOMC coming out, I wasn't really interested in holding the trade for too long. Like say hold it for, because my intended targets should have been 4150. Let me just, because why? That was the range high. When price takes out a range low, it will go back and take out a range high. So this should have been my intended targets, 4150, right? But then I was feeling a bit iffy about the trade because I had taken the loss. I'm like, do you know what? Fuck it, I might as well just hold it for the highs. But I shaved our position, so I can't really call it. Yes, the trade was worthy of the certain amount of hours, but I took off like major of my lot size way before then. So let's mark out the next interesting level, which is basically 4100. So this is 4100. So I entered the trade here, stops right beneath this at the low of the breaker. So this must have been my entry. Obviously, my spread put me a little bit higher. So this here was my entry. I got out at 15R. At 15R, I took out like 90% of my lot size. 90% of whatever lot size I had. Now, what am I shaving off 90%? If you have a one lot size on a trade, when price hit a certain level, you can take off like 0.9 and then leave 0.1 to run, which is sort of like what I did. I'm not gonna say what lot size I had on, but yeah, I took off 90% of my lot size. I wasn't feeling very comfortable. I do not like FOMC, is never ever nice to me. So when I saw FOMC coming out this evening, first thing that price was quickly drop and then started rallying back up, right? As soon as it hit 4100 level, I took off 90% of my lot size. And then finally I saw that, oh yeah, if I held it, I would have had another 30R. But what's the guarantee that that would have happened? Do you understand? I got 15R from the trade, so I might as well just close it. I wasn't interested in holding it any longer. I had a place I wanted to compound from, which was here. If price had dropped back to this level, I would have opened another position because this was a breaking market structure here. We had a breaking market structure here, and if price had dropped back to this level, I would have opened another position. But I wasn't interested in opening. Price never came back down to that level. So when price rallied higher, I didn't hold it for this target. I took off 90% of my lot size here. and then I let the remaining 10% run to the high. And guess what? That was the high of the day, 41.50. When you start calling this kind of thing, obviously I don't call it regularly, but when it happens, it feels good knowing that, oh yeah, I could get like the high of the day. Like if you look at this candle, let's say the high is 41,501. So literally, this was a resistance level. I remember even before on my Instagram, you see why I said range high, range low, 41.50 level. So on Wednesday, I did this, and then my remaining 10% literally hit the high of the day, and that was where I closed my trade. This is the start of the new day. It's the start of the new day. So that was it for cable. I didn't get any other trades on cable because I was done with this. Now, reason why I'm saying I'm feeling a bit iffy about cable, I'm not gonna, I don't know how the longs is gonna look. If you go back to this price chart here, if we go back to this price chart, this level, this is a daily order block, right? So you mark out this daily order block. So here's the daily order block, right? Whenever I look at blocks, you also have to take note of the EQ of the block. So if we do this, so let's put a horizontal line on that. So here is the EQ of the daily order block, right? Try to take this off. Come off already. All right, cool. This is the EQ of the block, 1.21719. So prices are rejected off of the EQ of this block, right? And if you go down to the hourly, inside the EQ of the block, it will adjust it to the body of the hourly block. Remember what I said about on cable respecting body of block. So the body of this block is open, high, low, close. So the open of it is 1.4219. So let's just make it 1.4218. So let's just say that's the level we're looking at. All right. So you see how price comes up and rejects off of the body of that block. Now I see this as taking subs into a key level, right? What I'm actually expecting for next week, I want to see price come back down to this level. It could boot up from here, expand Monday, Tuesday, Wednesday, going higher and taking out the stops here and the stops here, right? It could do that, but I won't even lie. I want to see price come back down to this level. If I see price come back down to this level, that would actually be very nice. I would actually like to see price come back down to this level for more buying to happen. But if this low gets taken, if low, this is low I'm talking about. If this low here, the low of this daily candle, so basically I'm talking about the low of 1.39820. Let's just call it 1.39820. So if 1.39820, if 1.39820 gets taken, right, uh, my long bias for cable will slightly be off. I wouldn't want it going any lower, but let's just see what happens. But what I would like to see this coming week is for a slow decline back down to this level and then rally high, taking out this high, this high, and this other high. It could just go higher or drop. But all I'm just saying is I'll be very careful coming into the market next week since there's nothing really, I don't know if I should say glaring. So my bias for cable, yes, I'm more bullish than I am bearish on price, but I'm gonna be very careful with this coming week. So that is basically how I see price and how I trade the cable. So off of cable alone, I must have done what a 29R, had a 15R off of the other trade. Obviously I shared with my last, so let's call it about 14R. That must what 29, 34, 29, sorry, 14. So 3 to 43R, and then I made 48R on GBPUSD. I don't want to go into the breakdown of that. Euro USD, I made about just 2.5R, and that was just it. So I made a pretty decent amount this week, probably about 50 or so. But yeah, that's just it. Most of my targets I met in a day, and I look to get in and get out. But all my analysis, most times they even come from the monthly, and that's it. Then I can't just give you a glimpse into crude oil. I like crude oil a lot. I want to start trading this pair. My plan is probably when I get really professional, like I'm talking about next 6 years from now. I know people are thinking, oh yeah, you already understand price, but I'm not even. I'm talking about long term. You know, when those kind of professional levels. When I get to that kind of level, what I am looking to do is just probably trade crude oil and GBPUSD for the rest of my life. Because I like crude oil a lot and the way it moves. So I like crude oil and GBPUSD. So crude oil, I was trading when I first ever got into trading. I dabbled with it for a bit, but I didn't stick to it because I felt like I didn't really know what trading was. So I wouldn't even lie, I was just getting lucky. So but with crude oil, let me just give you another example of waiting for price to do whatever you want it to do. I want to make this video too long. 40 minutes. Fucking hell, man. Anyways, with crude oil, you know what? I'll just leave this. Cable analysis done. Don't want to make it any longer. I hope you guys have a good week. And yeah, I'll catch up with you guys on Instagram. It's probably my first YouTube video. If you're trying to get at me at Instagram or Twitter. I'm using the same name as my YouTube channel, which is basically Yasuke on Charts. It's spelled Yasuke, but then it's actually pronounced Yasuke. So it's YASUKEONCHARTS. So I hope you guys liked the video and I hope it was insightful. I'm not charging anything. This is just free. Yeah. Thank you for watching.